Today we are going to discuss about statement of financial position. Right? Statement of financial position. The objective of preparing statement of financial position is to find out the financial position, right? To show the financial stability of the business. Financial position in the sense the balances of assets, liability, and equity, right? Assets account balances, liability account balances, and equity account balances should be mentioned under the statement of financial position. Right? So before that, we should learn what are the assets, what are the liability, and what are the equity accounts. Right? Already you know those things. To refresh your knowledge, let's do this activity. Here I have given assets. First, we are going to identify what are the assets. Now you know what are the characteristics of assets. Basically, there are three characteristics, right? First one arose as a result of past transaction. Second one can be controlled by the business. Third one, future economic benefits inflow to the business, right? So those are the characteristics of assets. Now let's do this activity. Categorize following assets into non-current and current assets, right? Let's categorize these assets into current and non-current. Land and building comes under non-current. Quickly do. Office equipment also comes under non-current. Right? Furniture, machinery, motor vehicle, all three comes under non-current. Furniture, machinery, motor vehicle. Land and building, office equipment, furniture, machinery, motor vehicle. All five comes under non-current. Right? Then we'll see what are the things given here. Closing stock, trade debtors, cash at bank, fixed deposit 3 months. All of these things comes under current assets. Closing stock, trade debtors comes under current assets. Cash at bank comes under current assets. Fixed deposit, specifically it is given that it is for 3 months. So it comes under current assets, right? So we know that current assets mean the assets which are available in the business less than 1 year. Non-current assets mean the assets which are available in the business more than 1 year, right? So according to that, these are current assets. Cash in hand also current asset. Cash in bank current assets. Cash in hand also current assets, right? Last one, investments. Investments comes under non-current assets, right? Here, land and building, office equipment, furniture, machinery, motor vehicle are tangible non-current assets. We can touch them, right? But investment is an intangible non-current asset. If it is a fixed deposit, just fixed deposit, it also comes under non-current asset. But here it is specifically given fixed deposit 3 months. Because of that, only it comes under current assets, right? Complete your activity. This is to classify assets into current and non-current. Right, next one, equity. We are discussing about the elements in a statement of financial position. First, we discuss about assets. Then, now we are going to discuss about equity, right? Equity means, if we define equity, we know that the assets which belongs to the owner called as equity, right? Assets which belongs to the owner. The part of assets that belongs to the owner, we call it as equity, right? So once I told you that equity consists 5 things. Basically, there are 5 things, right? Equity consists basically 5 things. What are they? Basically 5 things. We'll take initial capital, That means the basic capital investment of the owner. Initial capital. Next, it included additional capital. And also equity included income. Expenses also comes under equity. Drawings also comes under equity. Right? Due to initial capital and additional capital and income, equity increases. Right? Due to these three things, initial capital, additional capital, and income, equity increases. Due to expenses and drawings, equity reduces, equity decreases, right? So always keep in mind this thing, due to initial capital, additional capital, and income, equity increases. Due to expenses and drawings, equity decreases, right? So here, go through this. I have given here equity is increased as a result of net profit and new capital introduction. It is decreased as a result of net losses and drawings, right? Equity increases due to net profit. We know that income over expenses, we call it as profit, right? When expenses are more than the income, we call it, right? Same thing given here. So this is related to equity. Then we know that only two equity accounts, those are capital account and drawings account, right? Already you know those things. Only two equity accounts, capital account and drawings account, right? That also comes under statement of financial position. Next, let's move to the last element of the statement of financial position, that is liabilities. Go through this liabilities. Right, next on liabilities. Liabilities also, we can identify the three characteristics, right? First one, it's a current obligation, and also it also arose as a result of past transaction, and at last, outflow of future economic benefits when settlement made, right? First one, it's a current obligation. Second one arose as a result of past transaction. Third one, outflow of future economic benefits due to settlement, right? So these are the three characteristics of liabilities. Same as assets, liabilities also can be divided into two, as non-current and current, right? Non-current and current. Liabilities also can be divided into two, current and non-current, right? Sorry, here printing mistake, it should be liability, right? Please correct it in your it should be liability. Categorize following liabilities into current and non-current. Please do this activity. Categorize following liability into non-current and current liability. Quickly do this. I'll give you 2 minutes. Current liabilities means the liabilities which are available in the business less than 1 year. Non-current means liabilities which are available in the business more than 1 year. Current and non-current. Same as assets. Okay, let's do this. Trade creditors comes under current, right? Because we have to settle them less than 1 year. Rent payable also comes under current. We can't keep all those liabilities for more than 1 year. Insurance expense payable, all the expense payables comes under current liabilities. Interest payable also comes under current liabilities. Interest payable comes under current liability. Bank loan comes under non-current liability, right? Mortgage loan also comes under non-current liability, but normally for your level, only bank loan will come, right? I just put mortgage loan also. Mortgage loan means when we obtain loan by giving some property or something as a mortgage, we call it as mortgage loan. Bank overdraft also comes under current liability. Bank overdraft comes under current liability. It should be settled within short time period. That's why we call it as a current liability. Accrued electricity expense comes under current liability. Accrued electricity expense also comes under current liability. That means it should be settled within less than 1 year. Short time period we have to settle, right? So here we have identified trade creditors, rent payable, insurance expense payable, interest payable, bank overdraft, accrued electricity expense. That means all the accrued expenses, bank overdraft and trade creditors comes under current liability, right? Bank loan and other loans comes under non-current liabilities, right? Another word for trade creditors here, trade payables. Both are same. Trade creditors or trade payables, right? So here there's another question. We can do that. Question number 4. Select the answer. Select the answer which includes only the current assets of this business. So we'll see what is the answer here. Select the answer which includes only the current assets of this business. First one is cash balance, building, bank balance. Here, building means non-current assets, so we can have to skip that first option. Let's move to the second one. Debtors, bank overdraft, cash balance, closing stock. No, bank overdraft is a current liability, so we can't take that answer also. Third one, closing stock, delivery vehicle, cash balance, debtors. Here, other than delivery vehicle, all are current assets. Delivery vehicle is a non-current asset. Fourth one, debtors, cash balance, closing stock, bank balance. Yeah, that's the answer, right? So, fourth one is the answer. Select the answer which includes only the current assets of this business. Right answer should be fourth one. Here I had given another question, question number 5. The financial statements prepared by a business for the accounting year ends are profit or loss and income statement. No, that is same meaning, right? Another word for profit or loss statement is the income statement. Receipts and payment account and profit or loss account. No, we are not preparing receipt and payment account. Profit or loss statement and statement of financial position. Yeah, that's the answer. Profit or loss statement and statement of financial position. Right?